Hello, everybody. Welcome in. Happy Sunday. Thank you all for coming. Hello, everybody. Welcome. It's always great when the audio works. So thank you. And another big one today. And thank you all. Really appreciate that from the bottom of my heart. I love being here every day, and I'm so grateful to be able to do this and spend the whole weekend preparing this for you and then being here with you on a Sunday. So I appreciate that. And if anybody's up at 3 a.m. in Australia, good morning. Cybertooth Tiger is sometimes up at that time. And a disclaimer as well, this is just edutainment. I'm just a guy on YouTube. That's it. And I want to thank everybody in Patreon here. By the way, I don't come up with these questions. You do. So thank you so much, everybody. And also, the way it's amazing, week to week, the sentiment changes, the concerns change, and the community is always on top of what they need to be worried about. So let's jump in. I'm going to start with a bit of a kind of a, not the most exciting topic first, but trust me, I'm going to get to price predictions and allocations and other good stuff as well. That'll be super interesting, but we've got to get this stuff out of the way first. So this is from Bragi. And in the past, I've heard you say that the 2021 all-time high for Bitcoin was cut short because of the derivatives market. Could you elaborate what you meant by that? And is there anything stopping it from happening again? So this is tricky. So what I'm going to do is I'm going to start with how it's used in gold and then flip over to Bitcoin. So I don't normally talk about gold, but when I do, it's about something like this because there's a lot of parallels between the paper market, the derivatives market for gold, and Bitcoin. So the derivatives paper market for gold allows trading contracts representing ownership of gold without physical possession. Think about that. You're trading gold, but you don't own any. And I remember back in 2014, there was about $360 billion of paper gold traded per month. And there's only $279 million of physical gold delivered, traded. That's more than a 1,000 to 1 ratio. And that is, the derivatives market is now about 100 or 1,400 times bigger than it was back then. So the larger and far, far, far larger than the physical gold market. So the way this keeps the lid on gold prices is short selling in the derivatives market creates an illusion of selling pressure and can lower spot gold prices. And speculation in the derivatives market without the intention of taking delivery artificially increases the demand for non-ownership contracts, impacting spot gold prices. And this is why, JP Morgan has been fined for decades now for manipulating the gold market. And that's why I never touched gold. I don't like it. But anyway, that's separate. Let's try to draw the parallel now with Bitcoin and see exactly if there are any parallels, first of all, and if it does suppress price. So futures contracts for Bitcoin, they are settled in cash, which means that traders do not have to actually take delivery of Bitcoin. And this makes it easier for traders to short Bitcoin, which can put downward pressure on price. Now, sometimes I do this, but it's to kind of hedge a position, not to push Bitcoin down, but to protect the price that I have it at. Now, Bitcoin futures market is relatively illiquid, which means that there is not a lot of trading volume, which makes it very easy for large institutions to manipulate the market and suppress the price. And the Bitcoin futures market is not regulated, which means that there are a few rules to prevent market manipulation. And this makes it even easier for our friends at JP Morgan and others to suppress the price of Bitcoin if they want to. Not saying that they do, but if they want to, they can. And overall, there's a number of reasons why this keeps Bitcoin futures keep price suppressed, including futures contracts are settled in cash, like I mentioned, etc., etc. And this just puts a lid on the whole market. Now, I hear people say, oh, but the futures market is regulated. No, it's actually not regulated by a single authority, but there are some regulations that apply to it. For example, the CFTC regulates Bitcoin futures contracts that are traded on US exchanges. SROs, like the CME, have rules regarding the trading of Bitcoin futures on their exchange, but these regulations are not designed to protect investors from manipulation or downside. So you're dead right. And that's basically how they do it. People sometimes, I watch what options traders do and futures traders do to identify where the market's going. And that's exactly how this plays out here. So, Bragi, hope that helps. Next question. We've got a lot of questions today. I think this is 11 or 12. This is from GoPokes. I exited all my exchange accounts early this year now looking to park a chunk of cash somewhere for crypto trading. Any recommendations, guidelines, any Dexes viable at this point in your opinion from GoPokes? So I have been looking for a DEX that can do what I want to do. But remember, my goals are not your goals. And let's look at what I've kind of played with so far. And this list is by no means comprehensive. And once I find the golden ticket, I'll let you guys know. But the point is, there are many, and they all have different kind of purposes. So let's walk through a couple here. Again, this list is not comprehensive. This is not a deep dive. This is not a recommendation. These are some of the things that I've touched on. And let's talk at the beginning, like OXO.ai. It's a private DEX, and that gives 100% of the fees in ETH. Then you have Atomic DEX, multiple assets, not bad, but kind of small. Curve does a lot of stable coins as well. But what it does have, it has the deepest stablecoin liquidity. Deribit, it has Bitcoin and Ethereum options, but only those two. And it's pretty good. In fact, it's the main place to play options for Bitcoin, especially. DopeX has options and options trading. DYDX is altcoins. Very popular DEX for altcoins. GMX does spot and perp futures. Bitcoin and ETH, Chainlink, and Arbitrum and Avalanche. GMX, and I played with GMX to see if it would do what I want, but it didn't have the assets I want, nor the way in which I like to trade. Then Injective, multi-chain. They have margin and derivative trading, very popular place right now. Odds Finance, derivatives, multi-chain derivative protocol. Then you have Orca, which does all the Sol, USDC, ETH, Bitcoin, Radium, and other SPL tokens. That can be used for yield farming, AMMs, automated market makers, and margin trading. Then Radium, same thing, except you can trade NFTs there. And Serum, they have liquidity pools, order books, and NFTs. And then Thorchain, multi-chain, cross-chain DEX. And Uniswap, the original and the best altcoins, most popular DEX, but again, all ETH-based stuff. So the problem I have is I can't find the assets that I want to trade, the tools to trade them, the options and option strategies I want. Also, I don't have the liquidity. And fourth, sometimes the fees are very high, the spreads are very high. So I spend most of the time doing what I know best and trading derivatives, options for Bitcoin proxies. And that has been a lot of fun over the last 8 months. Believe you me, it's been incredible. So that's kind of what I do until this area is mature enough, stable enough, secure enough. I'm not going to ship a bunch of ETH to one of these DEXs. And I especially hate when they wrap stuff. So I leave it for now. But I am testing, but we're just not there yet, in my opinion. So if you do need to do something, Uniswap is a good place. If you need to do something that is Solana based, go to Radium. I find that the best. So next question. And yeah, I could spend 10 hours talking about DEXs. It's a tricky subject, but as soon as I find one, I will let you know. I'll show you how to use it too. Next one, John C. If you're seeking alpha today, which is finding excess returns in the market, where would you place $10,000? What is the fastest moving horse? And I realize that things are fluid and dynamic, always changing. My horizon is 1 to 2 years. So it's kind of an interesting question because I think on Thursday I shared this slide. It was during the Frenzy video, and the importance of getting in early. Let me just walk through it one more time real brief. If you get in early, if you buy something at $8, it goes to $24, you make it 3x. If it goes to 100, we'll be talking about one of those assets that is going to 100, you'll make it 12.5x. So 10,000 becomes $125,000, and 125K is life-changing. All right. If you are late, if you wait to buy into the market because you're bearish or you're sitting on all cash, you buy something at $24, it goes to 100, you make it 4x. 10K becomes 40K, which is also good, but it's not 125K. That's the importance of kind of, as the old expression, I think it was Warren Buffett or somebody said, buy when there's blood in the streets. I call it running into burning buildings, when others are fearful, jump in. But let's talk about some ideas. And these are just ideas, not an investment advice, but they represent what 95% plus of my portfolio is made up of these 4 things. So first of all, You should dollar cost average, or DCAS, as I call it, dollar cost average on steroids for half. I'll show you what that means in a minute. And you could jump in with the other half right now, because we know, for example, Bitcoin is going to a certain multiple. Trust me, I'm going to share those multiples right now. ETH is going to, Sol is going to, Tesla is going to do whatever. So one of the things I'm doing, so I'm going to show you some example multiples, and I want you to think about how you would play with your portfolio. And don't follow mine. I'm extremely heavy in one asset here on this list. But I went in heavy because of this point here. When things became so cheap, the cheaper it gets, the more I get. So I bought a lot, an awful lot. Pretty much most of the things I bought were things like Solana and Tesla over the last 8 months ago, because they were just stupid cheap. Anyhow, before you all shout out, "Oh, he's a hopium boy," this is from Standard & Chartered Bank, and I'm using my sandbag multiples. What that means is, if Bitcoin does this, Ethereum does this. If Ethereum does this, Solana does this, etc., and my Tesla price predictions as well. So Standard & Chartered, very, very big conservative bank. They say Bitcoin is set to quadruple by the end of 2024. That's big. 120K. That's huge. But remember, people are like, sometimes I've heard people say, only 120,000, but you can buy at 30 now or 25. Like, that's a 4 or 5x at that price. But anyway, that's just the nature of humans these days. But here are some multiples. Again, sandbagged. If Bitcoin goes to where Standard & Chartered says it's going to go, I'm very confident in these multiples. So that means Bitcoin today, price is 30,303 on the spreadsheet. When I took the real-time quote, 30,400. So it changed. It went down $100, I guess, over the last hour. But it's going to 120K, which is 4x. Okay, let's call it 394.7%. Ethereum, okay, based on historic multiples, Ethereum's at 1937. It'll go to 11,470 if Bitcoin goes to 120K. All right, that's nearly a 6x. Solana, currently it's at $28, and based on my historical multiples and analysis, that if Bitcoin does a 4x, Solana will do nearly a 6x, and then Ethereum will do nearly a 6x, and Solana will do nearly 8.5 plus x, which would take 28 to 248. And the crazy thing is, 248 is still less than the all-time high. So these numbers sound ridiculous when the price is so low. But if I was sharing this spreadsheet with you when the price of Solana was $8, you'd think I'm nuts. The price of Solana 4 weeks ago was $14. Now it's 28. So it's doubled in 4 weeks. And that shows you how disruptive this stuff is and how fast it can move. And that's the point I'm trying to say here. Take this, modify it, sandbag it like you will, and allocate accordingly. Last one on the list is Tesla at 281. Sorry, that's backwards. Whoops. I have them in reverse. So much to do today. My target over the next year and a half for Tesla is 450, and we are currently at 281. Okay, so you can do the math there. It's a 1.6x approximately. So with that, again, the message for everybody here is you have to balance risk and reward. I know if things work out, Solana will do a lot better than Ethereum, and Ethereum will do a lot better than Bitcoin. But that's not how I allocate, because I want to preserve capital first. I'm happy with less than hyperbolic returns as long as I keep my assets safe. The rest is gravy. Okay, so remember that very carefully. And that's why always, always, always balance risk and reward. And as Rob from Digital Asset News says, my goals are not your goals. So stolen from him. And by the way, some good news too. Tomorrow on DCA, Rob is back, 7:30 a.m. Pacific, 4:30 Central European Time. We'll see him there. So excited about that. Next question is from EJJM Tolkamp. A lot of Solana and Ethereum questions today. If you think that Solana will perform better than Ethereum, when is it time to allocate more towards Solana? So this is a great question, and I think about this 24/7. In fact, I spent a lot of last week trading the final bunch of one of my equities into Solana for exactly this reason, because I know, yes, Solana does have a higher risk than this equity, but this equity might only go up 20%. whereas the other one's going to do 4x, 8x, whatever. It's insane. And that's again, you got to balance very carefully though. So let's look at a chart. This is the flip ETH to Sol signal. This is the Sol over Ethereum chart on the daily. And you can see here, there's a green buy signal popped at the bottom. And that was confirming the time to literally flip Ethereum to Solana. The price at the time was 0.008. And right now, the price is 0.014. So it's gone up 80% in a pretty short window of time. And that all happened in a month. Now, another view of this chart, this is the gains, actually not 60, gains 69%. Year to date for this pair, this is Sol over ETH pair. Since January, the year to date return is 69%. But you could have done that if you just did this flip a few weeks ago. Now, again, remember, we are seeing signs that maybe alt season is happening a little earlier than expected, all triggered by the Ripple case and the SAC. So take that as you will. Will we see this pair down at this level again? I'm not sure. Now, another way to view it is that 61% gains in just 24 days of moving from one asset to the other. But there is still time, there's still opportunities to do this. So it all depends. Now, what I'm going to do is answer your question, but I'm going to dovetail it with another question that's kind of similar. This is from Scalapalu. Hope I got that right. Now that the pump is on, what should those of us with cash on hand do if we had planned to invest it? It feels foolish to invest after a huge jump, but it is also feels wrong to sit on a pile of cash that came in right after Thursday's jump. So I'm dovetailing this question with GoPokes because it is a kind of a dilemma. There are a lot of people that thought, listen to other people, etc., thought the market is going to tank, get a lot worse. That didn't happen over the last 8 months by no stretch. And now they're, okay, I can't sit on cash anymore, which is the right thing to do because the half-life of cash is 10.4 years, which means you lose over half every 5 years, but of your purchasing power, of course. Let's try answer this one way. And we've spent a lot of time over the last year and a half, 2 years, building things that really help people make decisions, okay, and help identify exactly how to layer in. So if you have a ton of cash, as per the previous question, deploy half, and then DCAS, which is DCA on steroids, on half. And then after you do that, when you want to use the other half, you can actually pick layers based on where you'll see support and resistance. So this is a combo chart of two different products. It's DCA on steroids and the layer out model, which is actually also a layer in model, depending on where things go. And you can see as well, the trend is still very strong for Solana right now, but it's been on a rampage for the last 4 weeks. Much of that is because of the Ripple case and also because of adoption and other good news, which we'll talk about in a minute. So again, get your tools, prepare to DCA, and deploy what you can. And it's never too late. I keep on bringing this thing up. Even if people are worried that they're not getting the 12x, a 4x is still incredible in traditional markets. There are some people that are sitting on stocks that I know personally that have gone down over the last 25 years. Gold has gone down over the last 11 years, losing over half of its value. So don't feel bad with the 4x. That is just incredible if you can get it. So next question, what are the common applications of Solana and Ethereum in our daily livings? So it's an interesting question from Anthony. There's a thing called ADLs or DLAs or something, activities of daily life, which everybody should do. So I'll talk about some typical use cases for crypto right now. And for people that aren't using it every day, there are things like decentralized finance. I use DeFi. It's a system built on top of a blockchain, so people can borrow, lend, trade, invest, swap, etc. Use derivatives. I spoke about some of those in the Dexes above before. And Solana and Ethereum are two of the most popular platforms for DeFi applications. Then you have your NFTs, your non-fungible tokens, which means they are unique and cannot be replaced. And they can be used to represent ownership of digital assets such as art, collectibles, even real estate as we go to the tokenization of everything. And again, Solana and Ethereum are the two most popular platforms for these two things. And then you have gaming. Solana and Ethereum are being used widely for gaming applications. And also in the games, in this whole crypto world, You can do things like buy weapons and trade skins and buy land and all sorts of stuff as well. And then you have Web3, which is the next generation of the internet, again, built on top of blockchain technology. And you can do all sorts of stuff there. You can live in virtual worlds and yada yada. So that's just some of the typical use cases. But I'll show you what I do and then what other people do and what a community member does as well that I pinged today. So first of all, I use Phantom, for example, to pull assets from centralized exchanges. So if I want to get something, I will buy it on a centralized exchange and then move it to a digital wallet, and from there move it to somewhere else. I use blockchain to pay employees. Many want to be paid in crypto these days. I also use it to convert digital assets and stablecoins. I also use it to trade, and I also use it to stake. I'll talk more about staking in a second. And then other uses, gaming, Internet of Things, Helium, music, borrowing, lending, rideshare, and there's also Hive Mapper, mapping software, lots of things can be done with blockchain. But I asked a member today a question what they typically do, and they said they do nothing on ETH, but they do a lot on Solana, and they check drip.house, drip.haus, which apparently is taking the world by storm, some type of NFT place. Also, they use it to manage funds, move funds between centralized exchanges, manage staking, sometimes swapping, use a centralized exchange or a DEX if possible, and they use Jupyter as well to swap. So that's some examples of what you can do, and that'll become much more common in the future, especially as the world goes much more digital, much more Web3, etc. So next question from Crypto Monday. I've recently subscribed to Arb Cloud and I'm wondering how I can increase my Tesla bag. I have an ISA account, which is tax exempt in the UK and can only trade stocks, no crypto. Can you show an example of how I can use this method to increase my bag? For example, MicroStrategy Tesla pair. So, sorry about this. I'm glad you brought it up, but Arb Cloud is not for that. Arb Cloud is for arbitrage detection between Bitcoin and Bitcoin proxies, such as a miner or MicroStrategy, etc. Somebody with a big bag of Bitcoin. And you can, for example, from this one user, they made 34% more Bitcoin with only 4 trades. But again, that's designed similar to what you want to do, grow the Bitcoin bag by finding arbitrage between proxies and Bitcoin. So what you need is this. I'm sorry if you bought the wrong thing, but fire an email to the inbox. We'll figure something out. But what you want is pair trading on steroids. And this is the way you can play an asset on the way up and play it on the way down. And you don't need to be able to do options. This is designed for inversely correlated assets. And as Mr. Krabs says, I'm blown away. Almost feels like I'm cheating. But that way you can make money on the way up and down. And that is how you increase your Tesla bag, especially in your tax account. And the ISA should have things like TSLAC, TSLQ, which is the inversely correlated asset of Tesla. So you buy Tesla going up, model will tell you to flip, sell your Tesla, buy TSLAC, write it down, goes up in value, do the same thing, wash, rinse, repeat. Super simple. Next question, stock versus leap options from G-Man. I have been loading up Tesla since 2019. Good job. You're doing very well then. And my portfolio is mostly Tesla and Bitcoin. I've also been rolling leaps since then. But with a long-term outlook of 2030 plus, would it be better to just roll leaps or convert them into stock? Easiest question I've got this weekend. So first of all, I can say what I do. I cannot give you financial advice, but what I always do, and I've preached this, now I've heard other people echo it around the world in different channels. I have an 80% hodl bag. That is my stuff that I build to keep, kind of like real estate. And I use about 20% for trading. And it depends on the market. For example, during the big dip, 9 months ago, 8 months ago, that 20% trading bag became 30% because there was so much fun to be had. So I was swapping assets into risky levered positions to take advantage of the super cheap prices. And so what I do, though, with leaps, I always convert them, almost always, unless I want out of the position, because I want to fuel my hodl bag and grow that. My trading bag grows automatically, and the profits from that build asset positions. And then I use the equity from the hodl bag to do all the stuff I love to do. Sell puts, sell calls, need all that margin to do some very aggressive trading. So that's kind of my strategy. And you should do the same if you're in the community. So this next question is from Rob1. You are staking Sol, but not ETH. Can you explain the reason for this? Interesting question. So I've shared many times the reason for it, but let me walk through why exactly. First of all, the staking rewards are higher for Sol. And the current staking rewards are around 7% last time I checked, while staking rewards for ETH are around 4+%. And that means I can earn more by staking Sol than staking ETH. And also, the staking process is a lot easier for Sol, making it much simpler to stake. And the easier the path, the less resistance. Also, because Sol uses a delegated proof of stake DPoS mechanism, ETH uses a proof of stake mechanism. It's kind of similar, but a little bit more tricky. And finally, the security of the network is good for Sol, so I'm not that concerned. But two things. One, I like to be able to control my assets. I can unstake Sol in a heartbeat like that. It takes longer to do that. Sometimes you lock away your ETH for a long time. That's why I didn't stake it last year, because I like to have the ability to flip it. Maybe flip my ETH into Grayscale ETH Trust at a 55% discount, or flip it into another asset. I don't get excited about 4% return in a year. So that's why I don't do that. And there's other reasons too. Sometimes when you stake, it becomes a wrapped something else. I don't like things that are wrapped. I like pure form as much as possible. In addition, some other reasons. I look at what the really big smart people do. Vitalik Buterin. Some reasons are the same as mine. Why he does not stake ETH. He has security concerns. He said staking ETH requires locking up your tokens in a smart contract, and you lose control of your tokens for a period of time. And he does not like that, especially he's said there is a risk that the smart contract could be hacked. Okay, that's Vitalik describing his protocol and the risk of a smart contract being hacked. When you hear it from him, it's kind of like straight from the horse's mouth. Complexity. The staking process for ETH is still relatively complex, and there are risks of making mistakes and losing your tokens. Bingo. And strategic flexibility. He said that he wants to retain a liquid position, so he can be flexible in his investment strategy, and he may want to sell some of his ETH if he sees another opportunity to invest in another project. So if Vitalik doesn't feel comfortable with the security risks involved in staking your ETH, then why should you? It's so funny, my risk aversion to ETH staking is more than 2 years old. This just came out from Vitalik 2 weeks ago. So we are exactly aligned. The reason he doesn't is the same reason I don't. Hope that helps. Next question. But by the way, in full disclosure, I have been tempted to stake a couple of slots of 32 ETH myself. Haven't done it yet because I like to see how things go out, and I like that flexibility too. Again, I don't get too excited by 4% or 5%. And next question. This is from TJ and Stephen Weston. A Solana deep dive into Firedancer and the potential of Solana when the protocol comes out of beta. Could this be the exponential outlier investment choice of this coming bull market? Or is it the overrated, broken protocol that some bears seem to maintain? So this is a great question, and I've been kind of a mile deep into Jump Crypto and Firedancer for, well, since they began, at least over a year right now. A deep dive is a big detailed video. Once we get a little bit closer, I will do that for you. But instead, I'm going to give you all the details right now. So thank you for the brilliant question, you guys. First of all, 10,000 meter view, 30,000 feet view from an airplane of what Firedancer is. It is a new feature of Solana that is designed to improve decentralization and scalability. It does this by making it easier for smaller validators to participate in the network. And they are using generic Intel off-the-shelf hardware, lowering barrier to entry. Sometimes the hardware right now is expensive. And as a result, the Nakamoto coefficient of Solana is expected to increase. As you know, I'm very into decentralization. And also, Jump Crypto believes this will bring 10x to 100x more scalability to the protocol. 10 to 100x. It's already running at 60,000 DPS, or can run at that. So that means easy, and they've tested last November at 1.2 million TPS. So that's huge. Let's do the whole deep dive into, shallow dive, let's call it, into Firedancer, the TLDR. it is a second client for Solana Network, and it is written in a completely different software language, C++. And the idea is if they completely rewrite the code base in a brand new language, there is zero likelihood of bugs being in the new program. Okay, so that means it'll be far more reliable and far more secure. And I think Toly himself did say that when they were building Solana, they had to rush to get it to market at the right time to, secure funding and all sorts of things. Therefore, if they had more time, they would have made it more perfect. And that's part of the problem. But despite some slight imperfections, it still does more transactions than all the other chains combined. Okay, so the zero chance of a bug crossover is very important. Jump Crypto is building it as a separate entity altogether, and it is expected to be released by the end of the year. And once Firedancer is released on Solana, it'll be more reliable, more secure, and of course, as they say, it will bring Solana out of beta. Totally said that. And that could happen in November or December of this year. We could be talking 20 weeks away. Not that far. Now, why is Nakamoto coefficient important? Here you see from Masari, Nakamoto coefficient remains above the industry average for Solana. Way, way above. In fact, a different view, better view of that is to compare it against all the top ranked Nakamoto coefficient chains on Earth from the SCP Profiler. These are the top decentralized protocols, and there's many of them, but literally there's only 10 that have 7 and above. Number 1, Bitcoin, 7,349. Number 2, Polkadot, 70 is the Nakamoto coefficient. Solana is number 3 at 33. Avalanche number 4 at 25. Cardano number 5 at 22. ETH number 6 at 20, because they've got some big players that control a large amount. Algorand, 13. Binance has grown up a lot. They were 4 only a few months ago. Now they're 8. Cosmos is 8 as well. And Near Protocol is 7. So those 3 at the bottom have changed a lot over the last couple of months, which is good to see. And remember, heading to 1.2 million TPS plus, if Jump Crypto is correct, that will be a game changer. Again, this is kind of like a few months old chart, but it gives you an idea of their perspective. And we do have other players in there like Aptos and Sui, but they're nowhere near where Solana is. But taking that 60k, which is already light years ahead of everybody else, multiplying it by a huge factor, could be a game changer. So, Stephen and TJ, you know where my money's at. And also, there's another interesting development I thought I'd stick in here while I'm at it. This is Celo. So Celo is on our list of the top 29 smart contract platforms. And they have decided to give up the ghost of being a layer 1. And now they're going to jump on the layer 2 bandwagon because they simply don't have enough business. We're seeing a lot of things hit the wall right now lately. But I think it was Hive Blockchain said, well, Bitcoin mining is getting a bit hard. Let's pivot into AI mining as a compute provider. And then we had other players lose some of their things like DeFi protocols, etc. So, hey, Brits, thank you so much. So that is the Celo news. And by the way, Celo had a terrible crypto compendium score and a really awful SCP profiler score. So the models continue to identify pigs that will never fly. And I love pigs, of course. So that's that news. So sorry for jumping off there into a separate tangent, but it's important to be in winners. Hope is not a strategy, ladies and gentlemen. Okay, switching gears to SoFi, VBrank. By the way, in full disclosure, I did own SoFi during the last bull run. And as usual, at the end of the year, I get out of my position. So, but according to this question is from VBrank. Faster horse, SoFi seems to be on the upswing with a court ruling to restart federal student loan payments. Would you hold or sell out of the position to acquire more Solana or Tesla? So this is interesting. And just so people outside the US have the background, SoFi is like a startup, fintech type startup. According to a recent S&P Global Market Survey, they believe they could increase their loan originations by 20% because of this new court ruling where the government is forgiving loans and they can refinance them, etc. And that could be huge in the third quarter of 2023. So a lot of people are very bullish on SoFi, and that's reflected in the chart, which I'll show you in a minute. And a report also estimates that their lending business could increase by 10% because of this. So let's look at some key ratios on the financial side. And according to this, I looked at some just basic stuff. I didn't do a full deep dive, but price to sales of 1.46, enterprise value over EBITDA, 42.2%, EBITDA compound annual growth rate, 36.6%. It's growing fast. Return on equity, 10.8%. Cost of equity, 8%. Watch that. I'll talk about that in a minute. Perpetual growth rate, 2%. I think they're currently growing a lot faster, but we'll see. Fair price to book ratio is 1.47, and their trailing price to book ratio is 1.46. So when you look at all of this stuff, and the market is constantly changing, but these valuations seem very, very fair. So the question is SoFi overvalued or a good value or fairly valued? I would say it is very fairly valued right now. The question is, though, what's going to happen? There is a key thing I'm a little bit concerned about. They have a very large debt load. They have $6.2 billion in debt, and the SoFi's net debt to equity ratio is about 66%, and that is very high. Thank you, Mr. Jim. I see you out there. The competitive landscape as well. SoFi is well positioned currently, but it's changing fast, and who knows, maybe Square or other places will try to get in. And also the macro environment is improving. Interest rates do impact their business, sort of, so that could actually be a tailwind for them as we go forward. Let's look at a chart from Wall Street. Here, SoFi revenue and earnings, you can see their revenue is growing really well. But what I don't like, especially in this type of market, I do not like companies with a lot of debt, and I do not like companies that are not making money. That means debt just grows. And here you can see their earnings, even where we are now, they lose about $300 million a year. And they lose nearly 20 cents on the dollar for every dollar of service they have. So that's not good. And I have no line of sight to their profitability. Now, that being said, the chart does look pretty good. They are 63% off their all-time highs. We know stock markets can be very irrational, but the trend is definitely up and to the right, being pumped by this student loan forgiveness program. So who knows? Could go back to 25, 28. Previous all-time high, it's now about, I think, $9. So from that perspective, you never know. Things in this frenzy of a market, things can get very, very inflated. So if I was a betting man, would I go long or short here? I'd probably go long. But I do not own SoFi, and I would not buy it. So that's SoFi. I hope that helped. And it's World Snake Day. And thank you to the team that help us identify these great charities and make it all happen. So we're helping animals. This is the Wildlife Center of Virginia to help support the care, food, shelter, and medical for, if you get this right, Clifford. He is a corn snake. Tim Paul. This is so good. Severus is an eastern rattlesnake or rat snake. Allegheny is another eastern rat snake. And Elliot is a western hognose snake. So we're celebrating National Snake Day by sponsoring these 4 little babies. So I hope they don't scare you. They're all pretty harmless. At least I think they are. So the team, hopefully let me know. Send me a text message right now if any of these are poisonous, but I don't think so. And if you want to amplify your intelligence, subscribe to this channel, because you won't find this information anywhere else on the planet. And that's a money back guarantee. So now I'm going to open up some live Q&A that came from the audience. So thank you all for being here and getting through all of that information so far. So first of all, happy feet. With everything going off the rails, what price are you setting your scope for Bitcoin and Solana? So as you saw during that presentation, let me pull that up again just to make sure you didn't miss it or didn't join late, happy feet. I think you were there early. But these price predictions, I mean, if you think they're too outlandish, what you can do is just cut them in half. Like that means Bitcoin going to 60K. I think that's absolutely a no-brainer. Ethereum going to 6K, also a no-brainer. We nearly got to 5 last time around. And Solana, 120 in the bag. Tesla, easy $400 stock, as I've been saying for a long time. A different animal. What makes things like outrageously attractive is when things like Tesla go to $104, $106. That's when you start looking behind the couch to raise pennies to throw into it. Matt C, in your become a millionaire on series, you arrive at amounts needed by 20, 30, or 32. Do you hold these amounts through all the 4-year cycles or sell and buy back at peak times in that period? That is such a brilliant question. So, Matt, I'm glad you asked that. The plan is, the reason I do the retire on series is to give people not only a hope, but a goal to strive towards. Okay, once you're on that building your plan, your bag, then you join the Patreon community, you get sophisticated, and you watch how I hedge things, how I swap things, and everything else. So if you imagine you're in a situation you can only get to say your goal is 400 Tesla shares, but you're never going to make it to 400 Tesla shares over the next 10 years. You can only get to 100. I can show you ways of how you can, sell tops, buy bottoms, amplify your returns, sell covered calls, and really expand that bag. Easy. As you saw in the previous thing, we had some person in just 4 trades in less than, I think, 45 days. They increased their Bitcoin bag size by 30%. Think about what you could do over 10 years. It's mind-boggling. And the reason I share all of this now is because it's time for me to share. I'm done. I'm fine. But I just want to try it. Leave a mark on the planet before I depart. So thank you, Matt C. Next question is from Fireman. Been researching Origin Trail more. Decentralized knowledge graph seem positive for AI. Limited supply and nearly all tokens are distributed. What am I missing? I did look at Origin Trails last year, and I'm going to have another look right now and see what I can find. But I remember a lot of people kind of were talking about it and were excited by it, and that's always a red flag. So let me see. Origin Trail. There's 2 things, Origin Trail and Origin Protocol I'm seeing here. And, so Origin Trail. If the ticker is track, make sure. TRAC is the ticker I'm looking up. Market cap rank 243. Compendium score got a lot better. If it's OG and if it's the Origin Protocol, compendium score is horrible. Really horrible. Both uninvestable, both inflating, 69% whale concentration on track. Again, they are not. Let me see. One other thing I want to check. Yeah, 98% off the all-time high. That's not, after the huge run that we've had, you don't want to be so far off the all-time high. Okay. And that's why we have the thing we're working on called the ATR score. So it determines kind of signs of life. Is it flatlining dead at the bottom? Or has it gone up so far there's no more upside? Or is it like 20% off the bottom and you can get another 60% up or more? That's kind of what we're looking at. This one doesn't look good. So sorry about that. It was bad last bull run. And it's still bad. Oh, I forgot to change these slides. Hold on 1 second. More questions coming. Yeah. Okay. Let me get back to those questions. Sorry about Origin Trail. Again, everybody, don't futz around with tokens that are ranked number 400. It's just too much risk. Okay? Too much risk. Play with the top companies. It's like buying a small little electric vehicle charging company and not buying Tesla. It just makes no sense. All right. That was some Fireman. Tim Paul, thank you for what you do. Salt of the moon. Well, we did see a lot of very big excitement with Solana over the last week or so. And Tamara P, do you think Moon River or Moonbeam has leg in the next bull run, or you get into more newer coins? Trying to get my portfolio ready. So the little lesson, if you have anything with Moon or Safe or any of those type of acronyms, I can tell you out of the gate, it's bad. And these 2 were bad last run, and they'll continue to just not make it. Go back to the Celo example I just gave. They tried to be a layer 1. They failed. Okay, let's pivot. Let's try be a layer 2 in Ethereum with the other 28 layer 2s in Ethereum. I call it band-aids. There was a funny picture I saw last week, and it was a guy's abdomen, and he had hundreds of band-aids all over his body. So the body is Ethereum, and you got all these little band-aids competing for business. I don't see it ending well somehow. Anywho, we'll see. Let me see. Atlas Doc. What time frame do you use for pair trading on steroids. I've been using the 1 day, but it looks a while to catch the last dip. You look at the 4 hour to identify your opportunities. Follow like 10 pairs closely. Know them intimately. Look at the 4 hour. Scan them every day. Once you see an opportunity, you zoom into the 1 hour, then the 15 minute, and then the 5 minute to strike. That's how you do it. I hope that helps. And Atlas Doc, Discourse, thousands of threads on this stuff. Jump in and be active there. And we also have support teams supporting, and I'm in there all the time myself, 24 hours a day, 7 days a week. And thank you for your super sticker as well. Bottle of Red, Andy, Signal 103, Kiwi Robin. I hope you're feeling better. Ansem Management Corp, Nick H, Forrest M, Investing KO. Hey, Mike from St. Jude Needs Us, and Bert's, Dartmoor, Jim Manley, Tim Paul, KN, Iron, Adam Q. That was the biggest show we've had in a long time. Thank you all for being here. Remember, tomorrow, DCA, my channel, 7:30 a.m. Pacific. And Rob will be here with CTO Larson, and super excited to have him back. And subscribe or hit the bell to get notified. I never say that, but make sure you know it's going to come. Also, follow me on Twitter. And yeah, somebody asked, is the IA Clips channel real? Yes, it's real. And we do everything on all channels now, but very few. I'm not on Telegram. I'm not active. I'll never email you and other social stuff at all because I'm not there. I don't have time. Thank you to the over 2,000 people watching live. Thank you for the likes on the way. I'd appreciate you all. And I'll see you all tomorrow morning early. Bye.